Mr. Dustin Garrow, how are you, sir?
Good, ma'am. How are you doing today?
All good, all good. Exciting times out there. In fact, the equities are lit up green, so it's I'm feeling really good. But look, lots to talk about as ever. The geopolitics. We're going to run around the world a little bit today, but we're going to start off in the US of A. Obviously, sanctions, the ban. We understand a little bit more about the full implications of that. So, what can you tell us?
Well, I think first of all, should keep in mind that this is a piece of legislation now signed into law. It was passed unanimously by the House and the Senate. Well, that doesn't happen very often, but it does show the support not only of the administration, but of the Congress. Now, I think most people felt this was coming after the House passed their version and the Senate, was still kind of trying to figure out the best way to do it. So it comes with its own set of uncertainties that, now we kind of have a law in place, which the 90-day period is running. I don't think that will necessarily, improve the delivery schedules, but perhaps. But the whole waiver situation, DOE had a call right before the Senate vote and apparently tried to explain to the utilities how the waivers might work. But I think they made it clear that, they don't want to be seen as kind of the bad guy in this. In other words, they don't want reactor operational issues that could transpire. Nobody's really kind of forecasting that yet, but they didn't want the finger pointed at them because the Biden administration has been very supportive of nuclear, as you well know. But having said that, the waivers are supposedly based on a utility now coming in individually and showing evidence that they've attempted to locate somewhere in the world replacement fuel for what would be not delivered by Texnov Export, the Russians, or on the national security basis. There's always kind of that catch-all. So it remains to be seen that once the waiver process starts, which DOE has said they will put out a more formal procedure within 30 days. One would think they saw this coming, we would have that, but now they're going to put it out in 30 days. A couple of interesting aspects, though, is they're required to report to Congress, I think it's monthly, on the waivers that have been granted. So a couple of items. One is the utilities are appearing a little uncomfortable that they don't want to be now individually identified as supporting the Russian efforts in Ukraine. So that's one side to kind of think about. So I think that's got to be somewhat taken into account. And then, just kind of how that waiver process would work, because I was told that the U.S. utilities now will have to claim force majeure. The government policy is officially you cannot import this material starting in 90 days. Okay, so the utilities then have to go back and tell the Russians, well, that long-term contract, firm contract, is no longer operable. But in some cases, then later, a utility shows up, maybe through DOE. Now, another interesting aspect that's going around is apparently DOE's not discussed this with the Russians, which would say you think that would be an important input. But down the road, a utility, maybe later this year, shows up with a waiver, by 2025 delivery, 26 delivery, whatever. That kind of presupposes that the Russians go, oh, okay, that firm commitment stream is now gone. Now, those are very low priced. Okay, so that's potentially a positive. But now it's turned it into options that they don't know who is going to come and show up at what time for what material on what delivery schedule. And I'm hearing more and more that the Russian kind of policy over the last 2 years, which was we really want to make these deliveries. We want to show the export market, particularly our reactor market, Egypt, Bangladesh, China, that yes, even under the most dire geopolitical environment, we still make our deliveries as we've done since the 70s. That apparently is starting to waver a bit on the Russian side. And I think it's because the volumes will now start kind of declining. And there's rumors that they're a little short on uranium this year still. So there's a number of factors. And the other thing that's been making the rounds is apparently that the Chinese have said, we will buy whatever amount of EUP you don't deliver to the U.S. I wouldn't be surprised if the EU doesn't follow suit fairly soon at higher prices. So, I mean, the word is, well, maybe the Russians deliver half that material for basically the same revenue stream. So again, the whole process brings its own uncertainties. Now, I think one thing I don't know if it's been emphasized, what happens is January 1 of 28 through December 31 of 2040, there is a 100% ban. No waivers, no exceptions, no anything. Now, as I think we've talked in the past at the World Nuclear Fuel Market meeting in Montreal, which would have been 2 years ago, right after the invasion, there was a school of thought that says, well, this will get resolved somehow. The Russians are then not acceptable by the utilities self-sanctioning. But eventually, unless there's official sanctions, a utility might say, hey, some of that really low-cost fuel, maybe not 20, 25%, but some fraction of it, I would like to go after again. And I think that the utility behavior in the past is benefits available. They like to give it a good look because it's always significantly more economic. And you may recall before the invasion, the Russians were saying they wanted 30 to 40% at the U.S. market. So that scenario was they would show up again, maybe, okay. But what this does now is it closes the door. So the utilities can't on their list say, well, after the war, the Russians may become a viable source again. So I think that's another factor that will help move the term market more proactively, because they can't just say, well, maybe by 29 or 30, we could have had somebody in the market offering very low prices, which affects what we have to pay everybody. So anyway, I think there's, again, a whole array of uncertainties, but then now a certainty over the total ban. So again, it's got a lot of ins and outs at this point.
A lot of ins and outs, and I hear what you're saying. If I'm a U.S. company, I don't want to be kind of caught out by the changing landscape. So if I'm a uranium in the uranium extraction business, it hasn't really sort of changed much for me. I still need to find the stuff, raise money to be able to extract the stuff, and then hopefully I can feed that into a North American or friendly enrichment service. Now, so which kind of leads on to, and we'll come back to some of those points, leads us on to what does this sanction do? It's part of a program where $2.7 billion worth of dollars to help with domestic enrichment is now available, but there's not too many people capable. We kind of got the Converdynes and Centrises of this world, and maybe even the Sapporo 5 will put the hands out for some of that. So what's happening with the enrichment part of this decision? Because the U.S. and whether it be the House and the Senate making a big decision like this, they need to have something which works, which is going to feed into the system. Have they timed this too early? Should they have waited a little bit, or do you think it's all going to be okay?
Well, I'm not sure it'll be okay. That might be leaping to the conclusion. Yeah, it frees up government funding and support. Now, I understand during the Almaty conference in April, some of the U.S. suppliers said, Mr. Government, kind of, please don't show up. Make it easier or make the regulations more clear, whatever. But I think the capital generally is available. It gets back to it's up to the utilities. The utilities have to come in, and they're not going to see $40, $50 SWU or $5 conversion or whatever. Because I understand ConverDyn was one of the groups that said, we really don't look forward to the government coming into the business. But the fact that it kind of frees up the budget, that's fine. As you know, budgets can go away with a change of administration. So there's always that uncertainty. But it gets to the customer's commitments and the fact that, it's still out there that ConverDyn sold out the next 5 years. Enrichment, yes. Will this mean Urenco will move forward in Idaho or somewhere? Well, it doesn't necessarily mean more conversion and enrichment suddenly becomes available in the near term. It's still going to take, years, basically, to have any meaningful impact. And the whole Centrus, the fact that they broker Russian enrichment, the word is they'll be the first guys in line with a waiver request. So again, it's always nice to have that budget open. And I guess they've come out requesting bids for, material. Well, if the material is not out there for several years, it's a nice thing, but, kind of what does it mean? So anyway, it's not a negative, but I don't see it as a massive positive until the utilities react. Now, keep in mind, the utilities will be in Atlanta the first week in June at World Nuclear Fuel Market. So I expect there'll be a lot of discussions with the suppliers at that point. So again, it may start to get the term market moving a bit more, certainly in uranium. As you know, they did minimal contracting last year here in the U.S., and hopefully this starts to put a little bit more of a fire under it.
Right. I'm kind of intrigued by the Russians. I think they've called force majeure, and hence the request for utilities to, claim waivers or try and see if they can get waivers, so that they know. I guess the Russians say, well, at least we know where we stand now, or we're going to start shipping it all east to. We've got lots of other customers. We're all running short of this stuff. We're going to give it to the customers who want it, who actually want us, and not being antagonistic. So they, in a meaningful way, I guess the Russians don't really care. They're going to be able to sell this stuff, and China making lots of noises about getting out there and securing supply. Now, I talked to Brandon Monroe end of last week when he was in London. He said, I think it's for the first time, I actually said it out loud, which was that they and a lot of the African developers retain the option of selling it into China. Now, that doesn't sound very friendly, does it? The US are saying we need to secure supply, but they haven't been moving quickly enough. And these African developers want some certainty over term contracts. They also say, more importantly, want certainty over, can I get the CapEx funded? And what are you in the West going to do? And if you don't do it, we've got options still in the East. So it's starting to get we're starting to get to the hard yards, as it were, where people are going to have to make decisions. And if we in the West don't move quickly enough, maybe we get left behind.
Absolutely. And the other thing that we'll talk about the recent investor conferences, but in Miami, NextGen made it clear they're negotiating 4 long-term contracts with big utilities, not necessarily large volumes, but it's to set up early relationships and all that. But in their presentation, they said, we're going to do term contracts, but they're spot market, no floors, no ceilings. So there are people that kind of interpreted that NextGen would be dumping into the spot market. That's not their intention at all. But yeah, as you point out, those 4 big utilities, I doubt they're all in the U.S. My guess is maybe a couple, but there might be one in Europe. It could be Chinese. Who knows at this point? So yeah, I think that, as we all know, this is a global market that's looking at demand growth, which we'll get into more, and supply uncertainties that aren't being really addressed. So it's anybody's game, basically.
I think an interesting thought around Canadian supply, and I'm talking about the uranium, not the enriched uranium, is that I think Canada has its own ownership rules in terms of foreign direct ownership. I think a few Chinese companies have kind of thrown out or have had their holdings significantly reduced. Would it be possible to get to a point where, if there were big Chinese utilities or buyers of Canadian or North American uranium, that those contracts may be affected by future changes in attitudes to where these critical minerals are sold? Have you ever seen that?
The answer is yes, of course.
Okay.
I think the Canadian policy still is they have to protect their domestic nuclear utilities. I mean, if you really dig back in, that they have that right to require that the domestic producer sector make sure that there's enough uranium for the group in, north of the U.S. The U.S., the Chinese, for example, are not warmly viewed here anymore. So I think that I think for the U.S. uranium industry, there should be ample demand coming out of the U.S. utilities. So I'm not too, or even Europe. I see that one of the producers signed a contract in Europe lately. So, but yeah, I think the governments will keep an eye on where their material is going. Certainly in Australia, I know they've always been, let's say, cautious about Chinese consumption of their Australian origin uranium. So clearly it's not going away. So if you're China, where do you go? Africa. So, and I mean, they're all over, as you know, Namibia. And I think, this year, the way it's going, Russia will have a much bigger presence there. So it's going to, the ban, for example, doesn't solve the problems. Let's put it that way.
No, it doesn't. It creates new sets of problems, new sets of challenges. And, as an ex-banker, you just, as long as you understand the rules, you can find a workaround, usually. Certainly that was the case in oil and gas when we worked in that sector. Lots of countries with sanctions on them found a route to market. It just meant that someone was a beneficiary of a cheaper commodity. I suspect uranium's not going to be any different. Okay.
Let me interrupt. Just make sure.
Please.
Just so you know, there is still language in uranium sales agreements regarding Russian source, because it's the only RSA that's still in place, the suspension agreement. And you have to basically confirm that this material has not been produced in Russia. It's not been obtained by a swap, a loan, or any way to get around the restrictions. That was put in place decades ago, and it's still in the contracts. So it's not like oil, you put the two tankers together out in the middle of the Black Sea and that really can't happen unless somebody's willing to be less than truthful when they sell on nuclear fuel. So just keep that in mind. It's not the same as other commodities.
I saw it all. I saw oil being tested and getting extraordinary results back. So it happens and needs must in desperate times and all of those things. It's a funny old world out there behind the curtain. In That's not reference to Russia, by the way, behind the curtain.
No, no, of course.
As we know, Margaret Thatcher took that down. So, so right. So we are in a very difficult place in terms of, we keep coming back to this kind of bifurcated market, because if you kind of got the West needing to kind of secure the basic raw materials from miners, they're not doing much to help the miners at the moment. Okay, and it's certainly not cascading down into the equities. I think we still have the big issues. We managed to kick ourselves up the ass when it comes to permitting and licensing, whether it be state, province, or federally. Something's going to have to be done about that one, because it's going to take a long time for these companies to get into production without that red tape being removed. I'm not saying let's skip a few safety measures. I'm saying some of those processes are ludicrous, and then on top of that, you layer the kind of First Nations issues, NGO issues, and other kind of vested parties. So mining's tough as it is. Do you think the government's starting to get it, or are they just completely focused downstream on the enrichment side of things?
I don't hear a lot of government focus on uranium, certainly in Canada, though, in the Athabasca. They obviously, as you said, Canada doesn't have an enrichment, so they're more focused on the uranium side. U.S. probably, they're starting to kind of get there, but not, you don't hear a lot of, in the old days of Senator Domenici, now we've got Senator Barrasso, but it's not like a big wave of government focus on uranium. Might get there. So we'll just have to wait and see.
Okay. So let's talk about some of the companies making noises out there. I mean, your company, Deep Yellow, they've raised a ton of money. They're going to get starting to get motoring. It's interesting to me that they're able to raise so much money so quickly and so easily. What's the kind of mood out there, certainly when around those sorts of conversations that you're having?
Well, as I think I was at the Canaccord Investor Conference 2 weeks ago in La Quinta, California, and then last week in Miami with Bank of America, and significant investor interest in the space. I mean, you can't get away from it. And, like last week in Miami, Singapore, Australia, Europe, Brazil, Wall Street. I mean, it was the first time ever we had not just one-on-one meetings, but 2-on-1 and then 3-on-1. There was not enough time to schedule all the investor meetings. So, yeah, I think there's significant interest. And some of it's, again, the demand side. What we're seeing there is just everywhere you look, be it the Emirates with their 4 new units they want to order for operation by starting in 32. Italy, they had reactors, which they shut down all of them, and now they want to get back in the industry. And the other thing is in the U.S., we had like Diablo Canyon saved in California kind of at the last minute. But, what's really interesting is the Palisades unit in Michigan. The utility shut that down in 2022, put it into decommissioning, transferred ownership to Holtec, which is a decommissioning company. Holtec is now in the process of recommissioning the plant. They've got a $1.5 billion loan guarantee from DOE, and they're pursuing, operating license extensions. And so it's kind of everywhere you look on the demand side. The other thing is SMRs. As you know, I was skeptical early days, but now they're everywhere. And even if they're in conjunction with large baseload units, Poland, I think, is big units plus SMRs. So we're starting to see that, I think, gain significant traction. And you there? Okay. And then the other thing are data centers. I won't go into that, but it's really come to the front burner where these massive electricity consuming facilities, up to a gigawatt of power, are being, certainly here, they're being what's called co-located near nuclear plants. Talon just sold a big site to Amazon, I think it was, right near the Susquehanna, 2 reactors, and they'll draw effectively the equivalent of one of those reactors output. Now, they're doing it in Illinois, Northern Virginia, New Jersey, all over. And the word is, they want that baseload, clean power. And the next step is SMRs. When they run out of reactors that they could co-locate near, they really want to embrace SMRs. So, that part of the demand story is really starting to take off. And as you know, the Canadians were in the market recently for uranium starting in 26 for their SMRs. So it's not all 2030 plus somewhere out in the future. We don't have to worry about it. I think somebody needs to really focus on what the SMR market looks like. There was the Kinsey report, 22 gigawatts have been announced. I'll bet it's a lot more than that now. So again, the demand side, just every week, there is more and more on the demand, potential demand. So and they all need fuel.
They all need fuel, and that's the good news. Whether or not the SMRs work straight out of the gate or not, they're going to at least order the fuel for it. I think the conversation I had last week, and unfortunately we're trying to get you in to join in there. It was with Mark Chalmers and John Cash over at UR Energy, Energy Fuels and UR Energy, respectively. I asked about red flags, because red flags in the sector can mean is good things for investors or bad things. And I think in this case, it's going to be, good news for companies, they would argue, who have teams of people who built mines, who have sold product into market. They can both sort of claim that to varying degrees. But there's a real issue, they said, with still trying to find enough staff to actually get these things going. And that problem hasn't gone away. So their argument was that there are lots of people talking a good game who haven't been there and done it before and don't know what's coming down the line. And that suggests even more shortages, because we should not believe the figures, the purported figures arriving when companies say they will. There will be delays, and that's going to be, again, good news for investors, not so good news for the sector.
Well, there's no question. How many years have we talked about this? And just looking at the U.S., there are those that think the U.S. can get 20 million pounds, 22 million pounds. I don't doubt that eventually. But again, the lack of staffing, it's like everything else. We looked forward about different factors and, this, that, and the other thing. Well, now we're there. We've now reached that point where it's, for example, like forecasts. It's almost like, forecasts are fun, but we're now in the real world. And it's like if you're a supplier, there's more than enough market out there at increasing prices. And I'm hearing like in South Texas, the in situ guys are able to find some oil and gas labor that will move into the uranium side. But when you get to, Wyoming or, elsewhere, Utah, not quite so abundant. So it's going to take a while for these companies to acquire staffing, and then they're going to have to train them up. And again, one thing, as you know, one of my themes is this industry now has 50 years of history. The U.S. has been mostly down. And so I think that's another challenge. If you're a mill worker, a well field development guy, you go, I've kind of heard this before. But if I look in the past, it's yeah. And then it's just straight down into the dumper. Do I want to tie my career to this industry? Convince me I'm going to make enough. I'm going to get options. I'm going to, all the good things. So I think not only is it the number, it's the cost to bring these people in. And I think we talked about it last time, School of Mines. They said geology, mineral processing, that whole area is down 35% over the last decade. So they don't even have the pipeline of the skilled professionals that are being trained up at like a School of Mines that then come available to the industry. So yeah, I think if you're, energy fuels or, your energy, whatever, a couple of the other guys, you're going to have a less difficult time. But again, very robust production forecasts may come in time, and it's going to require some more conventional mills. It isn't all going to be done with ISR. And so then you go around the world. In Canada, Cameco has said one of the reasons they're a little slow, not able to get the right people, get them trained up. Kazakhstan, they've mentioned it in the past, not so much recently, because the sulfuric acid issue is now kind of overwhelming them, along with, well field development, with transportation and other things. Yeah, but, the skilled labor, and then you get into doubling and tripling nuclear. Well, let's say, be conservative, double nuclear. How much uranium is that with, let's say, the current fuel cycle? It's like 350 million pounds a year. Well, I'm not sure where that's going to come from. So yeah, and all of this to me as an economist says higher prices. It's got to be higher, sustainably long-term, before boards and management will say, okay, we're on board, away we go. And I'll put in the years and, the show that we're going to get a good return. And it's not going to be selling at your cost of production in 5%. There's some thought amongst the utilities, I've read your DFS, that your costs are this, I'll pay a little bit more. Anything above that's not reasonable, it's not fair. I think they haven't seen anything yet. Again, we may have talked about how quickly the term market went through the 70s. 2 months. And I hear it's in the mid-80s. There is a U.S. producer apparently negotiating a contract at 85 now. And I think we're going to be in the 90s soon. And, the collars we've talked about have moved up. A lot of talk about removing the ceiling prices. It's a floor with no ceiling. Used to be a ceiling with no floor. So again, the market is really in a transition, none of which is good for the buyers. So
it's having been in the space for a while now, back in the banking days, but also more recently through this kind of social media, it's hard not to kind of drink the Kool-Aid a little bit. But when you sort of step outside and sort of see what people looking inside, after looking inwards, are thinking, like, kind of refer you to the kind of Economist headline, uranium prices are soaring, investors should be careful, because, this metal has a sort of history of meltdowns, and pardon the use of the word, but also last year with lithium doing the same thing. And you're seeing this, chatter now around gold price, which is, sitting over $2,400. I mean, amazing. But, the chatter is that, now these sort of central banks have kind of piled up of recent months, their mountains of gold. Is it going to settle down and reset at something in a more reasonable, circa $2,000? These questions are being asked out there. And I think, because of the run that uranium has been on, bankers, journalists, influencers who sit outside looking in, they're asking rightly us the questions. And do you think we can justify them on an energy needs basis, or perhaps do we need to calm down a bit?
Well, first of all, the inventory story. I mean, I won't go into it, but the excess inventory, I think the market is showing us that the conclusion UX came to almost 2 years ago has real world support. The spot volumes are dropping. you name it. And the old days of just, oh, there were pockets of inventory everywhere. Trick was you just had to liberate them. No one can identify. I mean, it gets down quickly to the sequesterers, be it Sprott or Yellowcake, and then the funds, the hedge funds. We just had the recent deal with NextGen. So how many pounds do the funds have? 10 million? 15 million? It's going to go in a flash of an eye, let's put it that way. And then overproduction. I hear in lithium, I'm by no means an expert. Well, then you start bringing on a bunch of mines and all. Show me, where are the uranium mines that have come on in the last 10 years? We have some restarts, and that's good, but it's by no means enough. We're still short. Even with the restarts, we're still in a deficit. So you go, well, it concerns me the bankers and the journalists think they can walk backwards into the future and, it'll just happen again. We'll have a peak and here comes the inventory. Well, you got to have the inventory available, and it's not available anymore. I mean, I'll go on record. It's not out there. Nobody can identify it anywhere. And in fact, just simple things like location exchanges. In the old days, you needed material at Chemical, had it at Converdyn. Somebody would do an exchange, maybe for a little fee. Now it takes 3 or 4 participants to try to put together an exchange. There's just no material out there. So, I would, and so it gets to how high is the price going to go? There's a panel at Canaccord, and, the panel basically said they don't see the top. What puts a lid on this? Oh, reactor operations. Well, I've heard utilities say $200. I won't like it. I'm not going to shut down that multi-billion-dollar plant. So it's more now availability. Where can I find enough material? And so that's what we're hearing virtually everywhere. So
we get it.
We'll see.
And we will see. Right. Okay, young man. Well, I appreciate your insight as ever. I think it's exciting. I think Kazasm from in Kazakhstan, that conference sounded like some big decisions made about how the sector plays the space in the next few months. I think obviously the Russian sanctions now is just that's kind of game over now. We've picked our sides, and now we got to work out where the heck we get this stuff from and what the hell that's going to do to prices. So as an investor, super exciting for sure. Well, stay in touch. Let us know when there's new news, and we'll speak to you soon.
Okay. Well, thanks a lot, Matt. You take care.